Course Overview. This module explores long-term financial growth for creatives by focusing on the principles of investment, wealth management, and portfolio diversification. It is designed to equip creative entrepreneurs, freelancers, and artists with a deep understanding of how to grow their income, protect their assets, and generate passive income through smart financial decisions. In a rapidly evolving economy, creativity alone is no longer enough. A sustainable financial future requires strategic planning, calculated risk-taking, and disciplined wealth management. This module provides creatives with a roadmap for turning short-term earnings into long-term wealth through appropriate investment vehicles tailored to their risk profile and income irregularities. 1. Understanding wealth building as a creative. Wealth versus income. Many creatives focus on income but neglect building assets. Wealth is measured by net worth, assets minus liabilities, not just income. Sustainable wealth for creatives means making your money work for you through passive income streams and capital appreciation. 2. Types of investments suitable for creatives. Low-risk investments. Examples: savings accounts, treasury bills, government bonds. Advantages: stability, low volatility, predictable returns. Disadvantages: low ROI, inflation risk. Moderate risk investments. Examples: mutual funds, index funds, real estate cooperatives. Advantages: diversification, managed risk. Disadvantages: requires research, longer time horizon. High risk, high return investments. Examples: stocks, cryptocurrency, NFTs, private equity. Advantages: high potential returns. Disadvantages: high volatility, market sensitivity, creative-friendly assets, intellectual property, IP, copyrights, music royalties, book rights, digital assets, online courses, ebooks, digital prints, real estate, studio spaces, Airbnb setups, property rental. 3. Investment planning and strategy development. Financial goals definition. Short term, equipment purchase, studio setup, portfolio promotion. Mid-term, down payment for a home, brand expansion. Long-term, retirement savings, passive income structures. Time horizon and liquidity. Needs understanding when you'll need the money influences investment choices. Risk appetite assessment. Risk tolerance varies by personality, financial cushion, and age. Asset allocation models. Conservative, 70% bonds, 20% stocks, 10% alternatives. Balanced, 40% bonds, 40% stocks, 20% creative assets. Aggressive, 20% bonds, 60% stocks, 20% high-yield alternatives. 4. Passive income for creatives. Licensing and royalties, music tracks, stock photos, artworks, and designs on platforms like Shutterstock, Envato, and Adobe Stock. Digital products, sell ebooks, templates, video tutorials, or printables online. Course creation and webinars use platforms like Teachable, Udemy, or Skillshare. YouTube monetization, podcasting, affiliate marketing, partnering with brands or platforms that align with your creative niche. 5. Retirement planning for creatives. Pension alternatives, individual retirement accounts, IR as voluntary pension schemes, especially important in regions with poor social security, health and insurance coverage protecting your creative assets, with business insurance, health coverage, and life insurance. Emergency funds, at least 6 to 12 months of living expenses in a liquid account. 6. Building a financial team. Accountants and bookkeepers for tracking taxes and expenses, financial advisors for guiding investments, legal advisors for intellectual property protection and contract review. 7. Real-life case studies. Example 1. A freelance photographer who reinvests 30% of all earnings into low-cost index funds while selling online courses. Example 2. A spoken word artist who licenses her work to ad agencies and reinvests the earnings into real estate development. Example 3. A painter who builds a brand, opens an art cafe, and earns passive income through merchandise sales and franchising. Conclusion. Investment for creatives is not just about making more money. It's about buying your time back, achieving financial independence, and ensuring that your art can survive without being tied directly to your labor. By approaching wealth building intentionally and with discipline, creatives can build empires from their passions and talents.